Another day, another softer economic number, another step closer to the Fed no longer being your enemy. After this cooler than expected consumer price index reading we got at 8:30 a.m., it's now clearer that Jay Powell, the Fed chief, is actually winning the war on inflation, which is why the Dow jumped 217 points today, S&P gained 0.34%, and the Nasdaq advanced another 0.64%. That was on the sixth straight month of better inflation numbers. So in the eve of earnings season, we can stop worrying about the big picture and talk about what makes individual stocks go higher. Why don't we start with the basics? Tomorrow we'll hear from most of the big banks. They'll unleash a slew of numbers. Most of them will be actually irrelevant to the stocks, but not all of them. What do we care about? Loan growth, defaults, how much money they're making off your deposits. They're paying you nothing. They're getting 3-4%. We'll see a set of headline numbers, the earnings, the revenues, the forecasts. It'll look simple, but it's never simple with the banks. And their numbers are often impacted by an amalgam of one-time considerations, which throws off our ability to make clean apples-to-apples comparisons with the analyst estimates. Now, most of the time, the bank stocks instantly go higher, or at least most bank stocks. And then we listen to the conference call, the tone, the refinement of the forecast, the question and answers. And then what happens? They give up their gains. Probably happening again tomorrow. We'll also be hearing from BlackRock's Larry Fink. Now, he's the man behind the biggest asset gatherer in the world. He is a titan and a great advocate of your rights, shareholders' rights, shareholder democracy. And that's something I'm going to be talking about with him tomorrow on Squawk on the Street. Which brings me to what I really want to talk about tonight. Oh, I could give you a couple of NASDAQ stocks that are up. Everybody knows how to do that, right? Oh, hey, look at that semiconductor. No, I want to do a little more. I feel like doing a little more tonight. I want to talk about democracy in the case of the Walt Disney Company. First, let me tell you, like anyone who bought Disney last year, I would say I'm plenty upset. And this is for my charitable trust. We've lost a lot of money on a situation that I felt very bullish about, and I was wrong. I've liked Disney forever, though. I've been to Disney World a dozen times. I brought my kids up on Disney movies. I can't live without ESPN. Disney stock is the first stock I recommended on Mad Money almost 18 years ago. So I'm neither a summer soldier nor a sunshine patriot. So when it comes to Disney's recent performance, believe me when I say that I am furious. This company has not done a good job. It's canceled its dividend. It's lost billions, squandering a stunning amount of shareholder money. Let me repeat. Shareholder money. Like my money. Or at least my trust. Like your money. You see, like other publicly traded companies, Disney's actually owned by the shareholders, who give their trust to the CEO and the board of directors to do a great job with their money. And, well, at least that's supposed to how it works. But some chief executives don't seem to recognize that they're accountable to anyone. Some boards don't think so either. Now, that doesn't really bother me all that much when the stock's doing well, unless we discover some sort of, like, truly awful criminal enterprise. But when the stock's doing poorly, I think management loses that right to be treated with the congenial, hail fellow, well met attitude that I have, that kind of Jeffersonian Gandhi thing I do. And when the company loses fortunes, like Disney did when they surprised us with $4 billion loss for its direct-to-consumer product last year, more than double the previous year's loss, you know what? I don't wear gloves, but I'd take them off if I had them on. I'm not going to just throw the towel and walk away.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.